Hey, this is an update to a previous video I gave last year on our financial system and where we were headed and how things looked at that time. And well, there's been a few developments since then, so I thought it was worth giving an update, specifically around the new reserve currency reset scenario we outlined in the previous video, which is really sort of starting to come into play now, and we're starting to see some developments along those lines. So I wanted to, share my thoughts on what's going on and what it means for this transition period we're in. I wanted to start with this great slide from philosophyofmetrics.com it's called, but so that's a really great slide to put what's going on in perspective and where we currently are. In the last video, I really spent a lot of time talking about the history of this period here, this US dollar reserve system that we've been in for some time and have, in the history of that. But this really puts the sort of fiat system we're in into perspective in a much broader, even further out perspective. And what it's good at is what it demonstrates is how, as we've gone through history, reserve currencies have come and gone. Often sort of within less than 100 years or 100 years thereabouts sort of time horizons. Starting with Portugal, Spain, Netherlands, France, Britain, the Great British Empire we're all familiar with, and then obviously the American dollar and the US Empire we're familiar with, and then right now the US dollar fiat system, which has got over 60% of global reserve currencies in US dollars. And what this chart's showing is the next step, which I actually agree with, which is that a global reserve currency we're heading into, probably controlled by the IMF or something like that. But it really just helps put this in perspective. People have lived in the dollar system. You kind of get a sense that it's always going to be there and that it always lasts. This chart really shows you historically, where these things do come and go, and it's not a crazy conspiracy theory to talk about this dollar system, current fiat system coming to an end and transitioning into something else again. And that's what I want to talk about today. So what's become clear to me is we're really seeing this battle for control over this new system. That's really a lot of the news, a lot of the stories that are coming out start to make sense when you think about these key players jostling for position and trying to establish a stronghold or trying to establish leverage over this new system we're in. Because don't forget, whoever reigns over this transition, whoever reigns over this, sets the rules for this next system we're going to enter into. As our current financial system becomes less and less stable and it becomes necessary to move into something else. If you're in the hot seat and you get to establish those rules, you're establishing the rules for the next 100 years potentially, or even longer, and you've got the ability to put yourself and your allies in a really strong position heading into that. And so, to my mind, there's three key players jostling for position here. The first one we're talking about here is the current ruling class and their fight to retain control, because these are the guys that are currently enjoy setting the monetary policy for the world. They're really sort of they're the predominantly Western central banks, the billionaires who influence the world, and the big overarching institutions like the International Monetary Fund and the Bank of International Settlements who kind of act as a central bank of the central banks. And these are these are unelected officials, and they're sort of private ownership here. So there's a lot of ability to manipulate things, not necessarily for the best interest of the public. Now, this financial ruling class, as I was been referring to them, they know the system is fragile. They know its days are numbered. I really believe that. And so what are they? So what are they doing? They are starting to lay down building blocks and starting to prepare the public for what they would like to see the new system stepping into. And what happened last month in April, which I thought was fascinating, was IMF came out with this news story. I put a screenshot of it here from Yahoo, but it's IMF and World Bank launch a learning coin to teach staff about blockchain, and that was fascinating. This is the IMF starting to sow the seeds and get the expertise around blockchain to presumably look at ultimately releasing a global cryptocurrency, which would be a perfect logical and understandable alternative to the system we're in now. Should it fail, a global reserve currency on the blockchain would have quite a lot of appeal and could really be quite probably successfully peddled quite well. And the fact that IMF's positioning this way and sort of getting the story out there and training their staff and learning their skills is, I think, very significant and quite telling. And so this is a chart of Bitcoin. I think this is, I think cryptocurrencies and Bitcoin in particular have been useful to a point, and I actually think they're being used by the current financial ruling class, the current established, people that are in charge of our financial system. Because ultimately, if they do want to move to a global reserve currency on the blockchain, they need infrastructure in place and they need the tech developed. So, you've seen Bitcoin chugging along and developing, since 2009, really. This chart's showing it since 2014. But what was interesting, this big bull run we saw right up until beginning of 2018, when Bitcoin started to get up into 20,000 area, that was too much too quick for the central banks and the banks, and they want blockchain, but they want cryptocurrency to succeed to a point because they want the infrastructure in place, I believe, and I believe they want technology developed, because you're going to need that to if you ever hope to have a system capable of serving the global financial needs. But they don't want it to take over and disrupt things too quick. So as we approached this area, you had all the central banks and banks just doing their best to really disrupt the Bitcoin revolution, if you like. Banks were pulling accounts from exchanges, and some countries were banning it altogether. You had mining being shut down. You had regulators coming out really harshly against it, and they were very successful in batting it right the way back down here. Actually got back to almost 3,000. What was interesting though was when we were around this period, you saw a lot of there seemed to be quite a change. Banks started being helpful again, and regulators started freeing up and started allowing the technology to do well. And we've started to see this surge up again. So it's, I think Bitcoin has been useful to a point that they want it to develop, but they don't want it to get too far ahead of where, they don't want to disrupt the system and start taking over, but they do want it to succeed. It's a sweet spot for them where they can develop it to a point and then switch into their, I believe, into the global reserve currency they would like us to move to. And it was interesting, we're just starting to break up here, and there's a story that New York Attorney General's come out against Tether and tried to disrupt that, and you can sort of see them wanting to support it, but then kind of as it starts to take off too much, wanting to sort of keep a lid on it again, stop too much institutional money flowing into it. So I really believe it's being a useful tool they're trying to control here. The other war that's been going on for a long time is, of course, the war on gold, and there's a good reason for that, because we're on a gold standard for a long time, and the central banks and governments they were determined to keep increasing money supply and increasing the monetary base and spend beyond their means, essentially, which hasn't stopped, of course. But when you had a gold standard, that was problematic because, as this chart here, which I really like, demonstrates so well, if you try and fix the price in gold and you increase the monetary supply, then your gold price as a ratio of money supply keeps falling. And that's what was happening through here. They were trying to keep gold redeemable, and they were increasing dollar supply all the time. And then people started to realize, hang on, you're creating more paper money, spending it, but it's not, you don't have gold backing for all that new money you're creating. So they started to redeem their gold, and that's when, in 1970, they were forced to break that peg here. And of course, as soon as they broke it, people rushed into gold, and so the price started rising. So even though money supply was increasing, the price of gold was increasing faster. And this is the worst fear for central banks ultimately in the fiat system, because if this was to get out of control, this price, this rally here, people would see gold as a better store of value than cash, and there's a danger. It is just a paper-backed system. There's nothing behind fiat currency. There's nothing behind US dollars really. Maybe the military, but there's no real substance behind it. So this could easily get away from them. So central banks has always been a concerted effort to suppress the price of gold. Now, what's fascinating about this chart is that you see here this low point 1970 and 2000, and we're here again right now, where there's kind of a point here where they create more and more money, and there are investors and other central banks who will say, well, this is cheap enough now. I'm gonna buy gold. This is there's a certain percentage of the financial system does want to be in something more secure than just cash, and so there's a sort of a resistance here. What's interesting is that even though right now we're back to these same levels, of course we know the gold price is much, much higher. I mean, we're back here in the 2000s, we're at $300 an ounce. Now we're at $1,300, and yet this ratio is actually back to this low point. And that's simply because they've increased the money supply so much, especially during the financial crisis around here roughly. They've increased the money supply enormously. So there's, similar to Bitcoin, there's a bit of a Bernanke put under here, though they wouldn't wish it to be there, but there is, because as they keep creating money, they do undermine the confidence in their own system. And so just as you're getting redemptions here and they broke it, there's a rush into gold, there's always a chance again that people could see this debt sort of increasing money supply Ponzi scheme for what it is, and rush back into gold again. So there's been a real concerted effort to keep price suppressed. They would love it to go lower. I don't think they're going to have much success getting it below this line here, which is I think about sort of 2% of monetary supply, or roughly around there. So how do they do that? How do they suppress the price? Well, they do it by selling paper gold into the market, using futures and using swaps to suppress the price. The danger there, of course, is some of those shorts, although most people, like fractional reserve banking, don't care about the physical gold and don't want to redeem for physical. Some do. And so they need to supply the market to keep the market honest, to keep it alive and not default. They need to be able to meet those physical demands of people who want to take physical delivery. And so where does that gold come from? Well, this quote here from Alan Greenspan tells you what's going on. He says here, this is the link if you want to look it up, from 1998, Alan Greenspan said, central banks stand ready to lease gold in increasing quantities should the price rise. And this is him saying this in 1998. This was during this spike here where it looked quite shaky, and actually, sorry, 1998, it was around here. But their fear was that they would lose control of the system, and this is their backup plan. This is how they control the price downwards. So they keep shorting synthetically, and if people want to take physical delivery, central banks have to lease their gold into the market, and that gold gets delivered, and the central banks now just have a paper promise on their balance sheet. So this war, I think this war is going to continue until they're ready to switch. They need gold price to be contained, just like Bitcoin. They can't have it take off crazily, because that exposes the Ponzi scheme for what it is. So they need a lid on gold, and they will continue doing this until they don't. And then when they let this go, it could take off like a coiled spring. But this war on gold is definitely continuing. You're seeing increasing interventions in the gold market. You're seeing, in hours where there's thin trading towards the end of the week, you're seeing $1 billion, $1.5 billion regularly just dumped in the market. In 30 seconds, just bang, just to try and keep the price a lid on this price. But it is having less and less impact though. So people, I think, are starting to see it for what it is. And of course, there's this war on cash, which has been going on, is increasing. I think will accelerate. And the war on cash is twofold. It's like they want to get rid of paper cash, but ultimately what they want to do is they want to be able to impose negative interest rates on people to force cash out into the system to keep their system going. And of course, if you allow physical cash in its current form, is a cap on how negative you can go, because people might just take all their money from the bank and just sit on physical cash, in a safe or under their mattress. So I thought this was another interesting thing out of the IMF that came out in February, where they almost were talking about a dual monetary system to allow deeper negative rates. And their proposal was, they first of all tried to ban cash outright, and they've run into quite a lot of resistance there, so I think that's probably off the table for now. So this is an alternative to that, where they're wanting to have essentially a two monetary system. So the idea here is you'd be able to impose negative rates at the banks of like -3%, -6%, really extreme negative rates if you needed to. But to stop everyone moving to cash, you would make cash no longer redeemable one-for-one with your electronic dollars. You would have an exchange rate, and the cash exchange rate would keep falling to keep up with the negative yield that you're imposing on cash. Essentially, you're running a two cash system, digital and paper. And the paper cash would keep depreciating to essentially allow them to exert this negative rates on everybody. So these are sort of the three signs I'm seeing of the current financial ruling class imposing, wanting to retain control and wanting to move into a new system, which I believe will be a crypto, global cryptocurrency, and wanting to keep their current system, the threats to their system contained. And of course, the war on cash and negative interest rates is one of the key elements of this, because it keeps the current bubble inflated, if you like. But of course, for the financial ruling class, it's not enough to have a plan B to move into, a global reserve cryptocurrency. It's not enough to keep the threats at bay and to keep the war on cash and the war on gold raging. They also have to worry about keeping the the system they created propped up, keeping this bubble inflated. They can't have the system implode on itself and collapse as it did in 2008, 2009. They can't have that happening until they're ready for it to happen, until we get to, until they're ready to introduce the world to their new reserve currency. So they've got this battle to preserve the equity markets and the current system and the bond markets, the system we're in right now. And this chart down here demonstrates that well. The last quarter of last year and up to today, the S&P 500 went through this crash in December last year, and central banks panicked. The Fed reversed course, and there was a massive increase in monetary supply that went on through money injections and through increasing balance sheets. You can see this blue line here, how much that money supply increased. It went from 72 trillion to 74.5 trillion. Globally, and that was enough to rescue the equity markets and get us and push us back up again, but only back to where we were. And that's the thing about creating more debt and creating more money, increasing money supply. You're not actually creating real wealth. Your bang for your buck, it does keep diminishing. But it was enough to keep the system afloat and prevent it from imploding, as we may well have done had the central banks not done this. And so there we are. So, but because this is all a confidence game, and because this paper-based system is solely confidence-driven, especially as debt builds mountain gets higher and higher, the narrative has to be controlled. Don't expect. I'm not expecting these guys to tell you what the truth and tell you what troubles there are. It's kind of like expecting tobacco companies to warn you about the health risks of smoking. They will come clean when they're forced to come clean. When everyone already knows the truth, that's when you can expect the truth to come out. Until then, they're going to keep saying the narrative, telling you everything's fine, until they're ready to let this thing go and move into their new system. So part of that deception, it is negative rates. It is telling you the economy is always fine, even when it's not. It is keeping keeping the big, the gold and Bitcoin prices suppressed if they can, to not have the charades that have lifted from people's eyes if those were to take off and expose the currency system for what it is. The other part, of course, is controlling the media, and I just want to touch on that here now too, because if you get your news from mainstream media channels like CNN and or you're searching Google, you are not getting the truth. I'm afraid that you just aren't. You're getting propaganda. You're getting what you need to be told to keep this machine, to keep this system afloat. I just want to try and demonstrate that here. So, for example, CNN here on this table, as you can see, it's well below Fox News. You've got this sort of ratings here. It's below. You can see it's below Discovery Channel, it's below Cartoon Network, and it's below a lot of things. It really isn't a material player in terms of views, and yet CNN has an outsized, among others actually, but has an outsized role in the news that we see and that we're fed, even though its viewership is so low. And CNN is one of the primary vehicles that the financial ruling class uses to promote their agenda and to get their message across. And I want to just give you an example of how their narrative is peddled and how it's pushed upon us. This is a simple. You can do this yourself. This little test here. I've just got two searches up. One is Google and one is DuckDuckGo. And for those that aren't familiar, DuckDuckGo is simply it's a similar search algorithm, but it doesn't have any censorship. There's no tweaking of the search results to promote certain agendas or certain narratives. It's just purely based on hits and viewerships, which is what you'd expect. I won't go into the stories here, but Trump news is a classic one. Just type in Trump news. It's a very politically charged topic, specifically because Trump is very much against the current establishment, the current financial ruling class. So he is particularly vilified, and which gets shown up here. But I wasn't even really wanting to go into the narratives. You can look at it yourself and see the taints when Google versus the DuckDuckGo and the opinion pieces you get over just purely factual news. But the first thing you can notice straight away is Google here you will notice that the CNN will keep appearing, even though, like I say, the viewership's not very high. You'll see CNN when you click on the news feeds. You'll see CNN appears here, it appears here, it appears here. If you do the search, you'll invariably see CNN pops up all the time in Google searches, because they, like I say, they do peddle the financial ruling class's propaganda. You jump over to DuckDuckGo, and you'll be lucky if you even see a CNN article. You'll see the first one is Fox News, which you'd expect, because as I say, at the top of the, as we saw at the top of the viewership tables, and you'll scroll down here, and you just won't. It's unlikely to even see a CNN article here. You might see one, but you're much more likely to see Fox and other channels which which appear at the top of the viewership tables, which is what you'd totally expect. But and this, you also see this on Facebook and YouTube and Twitter. Often those trending news stories and those search algorithms are equally manipulated in the same sort of way to make sure that this particular narrative gets fed to you. So look, I just wanted to stress that one of the tools that's being used against us here to try and hide the truth and keep this system going is the news we're fed. So you can't, if you're looking at Google and you're watching CNN, you have to realize that you're not getting an unbalanced, unbiased view. You're getting a particular agenda fed to you. So moving on. This is just a little bit of some of the topics we talked about, but central bank policy ultimately has been very inflationary. We have had this huge increase in monetary supply. We saw it here with the gold. The game is we have to depress this at all costs, but also we have to support the current market at all costs. And people often say, well, where is the inflation if this monetary expansion is so bad? Where is the inflation? Well, it is there. It's just not hiding in a basket of goods prices. It is in some. We touched on that in the previous video, but really it's hiding in asset prices. And this chart of the Dow here, I think, is an interesting way of expressing that. You see here, this is the Dow price in terms of hours worked to buy the Dow. So to buy 1 unit of the Dow, how many hours you have to work? And you can see back in the 80s, you had to work about 100 hours to earn 1 unit of the Dow. Now you're looking at 1,100 hours, and you can see how this is ramped up. And that's real inflation. If a worker wants to have a stake in the economy, that's getting more and more expensive relative to his earning power. So that is inflation right there. And this gold chart shows it too. We're at the ratio of gold to monetary supply is right down at the lows, and yet gold prices are still at 1,300. We're at a very high gold price relative to even recent history. So that is where inflation is hiding. And of course, gold price, that's even with all that suppression. Imagine if they took the boot off the throat of gold, it would be who knows where it would be. So that is what I wanted to share in terms of the current financial ruling class, what I'm seeing, what signs I'm seeing as to what they're doing, what moves they're making, what's being hinted at through their actions. Like I say, you won't hear it from their words, but you look at what they're doing, and you'll start to observe that. But they're not the only player in the room, and so another key player, vying for a stake at the table on this new financial system, this new reserve currency, is the Eastern nations. They're fighting too. I'd call them the Eastern Bloc. This is China, Russia, Turkey, and Eastern Europe. They're also vying for control over this new reserve currency system. They don't enjoy much sway over the current dollar system. In fact, they're often attacked by it, and with sanctions and accounts frozen and being turned off from SWIFT and everything else. And they're likely to be left out of a new IMF crypto reserve currency system too, because those are controlled by the Western financial ruling class, as we've discussed. So they don't, they're not keen on this IMF based global cryptocurrency system. They certainly, if it's going to happen, they want a big stake at the table, a big seat at the table. So they've got two strategies for ensuring that they have some clout in this new system. The primary one is they've been buying gold rapidly. So this chart on the right here, I think this is a fascinating chart. This is central bank gold purchases. So you can see this is just showing from 1990 to today, but you can see how central banks, this is primarily Western banks, I should add, selling gold, keep a little on gold price, and try and convince everyone that's not important. And then 2008 crisis comes along, you get this massive expansion in the central bank balance sheets and money supply. And look what happens, gold suddenly, buying gold again. Admittedly, this is mainly Eastern banks buying gold. Western banks certainly stopped selling it. They're still leasing it, but they stopped selling it outright. And the Eastern central banks have been buying it in spades, and some, including Eastern Europe. It's not just China and Russia. So that, in a transition period, having gold will I think buy them a seat at the table. That will be a lot of wealth. Will move into gold as fiat collapses. That ratio chart I've shown a couple of times will be spiking up. And if you've got a big chunk of that gold, which the East is trying to secure, that will certainly give them some leverage. The other thing they're doing, of course, is the Silk Road. That ensures they have a stake over the trade, global trade, in the East. So that will also, I think, secure them a seat at the table and give them some sway over what the new reserve currency is going to be. If most transactions are happening in their local jurisdiction, in their region, that will certainly give them some influence over the new system. So that's certainly a big one you're seeing. And there's a third player, and that's where this player is harder to define, but I've called them the Western Patriots. They're a group of people in the West who are wanting to return to a democratically controlled sound monetary system, such as we used to have. So this includes nationalist movements, the Brexit champions, Nigel Farage and others. It includes the Italian government, obviously includes the Trump administration, and there's a real uprising. You can call it populism, what do you want to call it? But it's really against the financial ruling class, who have kind of abused this financial system for their own ends, their own means. That includes central banks. It includes the EU, the IMF, and the Bank of National Settlements. It includes all these organisations. There's a real desire to get rid of the corruption and return to a national, sound monetary system. We have, rather than having unelected officials in those seats of power, privately owned central banks, it's a desire to have it come back under elected officials, so that people have a say in it, and more transparency, audits, and everything else. And a lot of the stuff you're hearing at the moment, whether it's to do with immigration or foreign policy or identity politics or socialism versus free markets, a lot of it is just noise. A lot of it is just ammunition that's being spent as part of this battle. Ultimately, if you trace it back, it's trying to secure votes, or it's trying to secure leverage or political leverage, which I ultimately believe is all about trying to be in the hot seat when we transition into this new system. They do have some powerful allies. There's not just poor populist, working class people who are in this movement. Aside from the odd billionaire like Trump, you've also got the Israeli movement. The Zionists are a strong nationalistic movement. They want to see Israel front and center. They certainly don't want to see just a big global conglomerate. They want to see Israel take center stage. So, and there's some serious wealth amongst these billionaire Zionists. So they're a strong backer of Trump, but they're a strong backer of all these nationalistic movements, and they certainly are a major. They're a real powerhouse in terms of opposing this sort of globalism. One world government, one world sort of currency that the current financial ruling class would like to see us move into. So they're another player. This article I've got from RT here I thought was interesting. It's the Italian government trying to remove some power from the central bank and making the point that gold belongs to people, not the bankers. And the Italian government moves to seize reserves from the central bank, it's saying here. But you're seeing a real battle going on. The central bank in Italy is really being challenged. And I believe the central bank in the US and the Trump administration will possibly be challenged. I mean, it is being challenged already, but I think that similarly that battle may spread into the US soon. Certainly, I think if Trump wins another term, that battle may really ratchet up. So that's what's at stake. The game is for all the marbles at this point. These different players, the current financial ruling class, they call them the globalists, or whatever you want to call them, the deep state, whatever you would like to refer to them as, the Eastern Bloc, and the patriots, or the populists or nationalists, whatever you want to refer to them. Those, it is for all the marbles these guys are playing for. If you're in the hot seat, if you're sitting in power, particularly if you're in the US administration during this transition period, then you are setting the rules for the next 100 years, maybe even more. You'll be the chance for good and the chance for evil during this period, quite frankly, is huge. So both parties in the US, particularly, uh, need a system to hold together. The Trump administration doesn't want to see the system collapse until he gets re-elected. But likewise, the current financial ruling class can't have the system collapse until they're likewise in power to manage this new transition. If this thing falls apart too early, from the Trump's point of view, his administration might be elected out if the economy fails. From a current financial ruling class's point of view, they might be, a corruption might be exposed and the cat might be out of the bag. If the Eastern Bloc, they also, their economy has been hung together by duct tape at this point too, but they need their population to carry on believing that their financial system's been managed skillfully and well, and so everyone's got this vested interest in keeping it going. So while they're kind of trying to keep the system hanging together as best they can and keep telling us all that everything's fine, there's actually a war raging to be in this seat, to be in the hot seat, the seat of power during the transition. That's really what's going on here. So it's not. It is, I guess, mainly Democratic Republicans in the US, but it is really, though, a globalist versus nationalist sort of battle. There are Bush era Republicans who are globalists, who want the current system to stay in place. They're not all patriots, as I've referred to them as. I don't know for sure if the next election cycle, the next 4 years after 2020, is going to be where this thing happens, but it quite possibly is. But if not, it may be the cycle after that. It may not be too far away. So, for us, what does it mean? What do we do, and what should we expect? Is this isn't Armageddon? When the current financial system fails, like it's done many times in the past. You can see here, it's not the end of the world. This isn't Armageddon stuff. This is a huge financial upheaval, and there are massive winners and massive losers when we go through this transition into a new reserve currency. So, we sadly, most of the public is just historically and undoubtedly this time will be in the loser category, and it'll be your insiders and your smart money and connected money that will come out of this, probably growing their wealth fantastically, sadly. But what can we do, and what can we look out for as individuals during this as this game's being played out? So, first of all, like I say, please do not just accept what you're told on CNN and what you pick up on a Google search. You have to be more informed than that. You're not going to be told what's really going on. The system relies on you being told, not being told the truth, essentially. We can expect, I believe, to be increasingly coerced into stocks and bonds and traditional financial assets. As the system becomes more and more fragile, this bubble's growing, it needs an ever-increasing amount of investment pouring into it to keep it afloat. So you can expect us to be increasingly forced into those. And I do believe that economic data and earnings data is going to become less and less relevant. The carrots we're used to looking for, the carrots looking for good growth and good earnings, they're becoming less and less relevant now. Increasingly, it's all going to be all about trying to escape the stick, trying to escape the monetary suppression. As you have negative rates punishing you for keeping money in cash, or negative real yields. We're going to be scared and forced into stocks and bonds, and probably at the worst possible time when this thing will all just go like that. But that's what we should expect to see. The only escape hatches to this upheaval really is gold and Bitcoin. So you can expect them to be constantly vilified and managed as much as they can, but regardless, they are going to be ultimately winners. So I do believe you want to have an allocation there. Expect it to be volatile because you're the enemy when you're in that. You're going to be, you're part of the problem as far as the financial ruling class believes. So you can expect volatility. You can expect, you certainly don't want to own these things on leverage. But nonetheless, they are the only escape valves and escape hatches as we go through this transition. Central banks, like I say, are buying gold right now. And I believe smart money is moving into Bitcoin too. You're seeing Bitcoin making a move again. And bear in mind that we only went back to prices that were seen, a year and a half ago or so. We even this pullback hasn't been that severe as far as the cryptocurrency life cycle has gone. What we see, it is true. Real assets, traditional assets like like stocks and housing and bonds, they may increase in nominal terms, just because money supply is going to be increased so dramatically. But if you look at Venezuela and Zimbabwe and other examples, those assets can go up in nominal terms, but they can still fall dramatically in real terms. As compared to gold or Bitcoin or some other safe haven reserve asset that's outside the system. So I think the real wealth preservation and wealth ability to grow your wealth is going to come from gold and Bitcoin. I don't see. You're certainly going to do better in stocks and housing than you are in cash, but I still don't think you're going to do very very well in terms of actual wealth preservation. Look, that's my take on all this. I will give another update when I see more. When I see enough new information coming out there, when I see enough new signs that confirming this movement, or maybe confirming the timing, or maybe showing us a potentially different take on this. But I wanted to keep keep you guys informed. And look, I hope this has been helpful. We'll catch you again. Good luck.